Dan Passarelli here. Well, the S&P 500 closed pretty much flat as a gosh darn pancake, down 2 cents, a 0% change on the day. Although, if you look at this chart that I have right here, we did get a little bit of movement. We were down a bit on the day. We opened lower, and then we had a nice green candle pushing its way up. Ended up being an outside day, so we got a little bit of movement, but there was a little bit of indecision for the market overall. Now, that said, there wasn't necessarily indecision among the sectors. If we look at the XLK, that is the technology ETF, the SPDR technology ETF. That one, despite the fact we have a green candle, it's because it opened so much lower and still closed below yesterday's close. So it is down on the day about 0.5%. And on the other side of that equation, we have XLF, which is the financials ETF from SPDRs. And that one, though it did open lower on the day too, had a pretty good outside day green candle. Didn't close above this 200-day moving average, but closed up about 0.5% on the day. What do we attribute all this to? We attribute all this to the longer-term interest rates being more jittery and just the constant beating of the drum of the question of will this put us into recession, higher interest rates, and will interest rates go higher? And we tend to see this trade-off between, more traditional companies and growth companies. Cyclicals versus growth companies is one of the ways to look at it. But in this case, because the banks have earnings coming out this week, many of them anyway, that is where a lot of that strength is coming from. So I hope that helps. This is Dan Passarelli, TradeSmart.